Okay, so I wanted to take a few minutes and discuss a question about, well, selling too low in the trading range and when is it not, when can you sell in a trading range and when should you not? And let's just go straight to the question here. So, the question's been selling over or under this 845 bar, and more of why is it a bad sell? The reason why is simply, well, here, notice this, consecutive sell climaxes, but every time we make a new low, we close the gap. So anywhere here, here, breakout, close the gap, here, breakout, trending down, but a gap open. And I just want to see something real quick, arguably somewhere there it'll lead to a measured move, spike and channel, 1, 2, 3 pushes down. But trends normally don't get stronger as they go, they get weaker. And before I go into more detail, I want to sort of just zoom out on the picture. So kind of, well, let's just start with the daily chart. Or actually, let's start with the weekly real quick. Here, yes, okay. So far, big down, big up. Daily chart, strong reversal. Monthly chart's going to be a bull reversal bar. But consecutive, obviously a spike and channel. Arguably 3 pushes, 1, 2, 3, 1, 2, 3. 60-minute. We zoom out. You can see it's obviously channeling up. Maybe, although this was, for the record, we're talking about the November 11th. So maybe a spike, channel up, but the channel's getting flatter. Sorry about that. So if we look at a 15-minute, the one thing we can notice is clear channel, but here, and this is just towards the top, arguably wedge, first push, second, third, maybe major trend reversal, not quite a leg 1, leg 2, but the point is we're forming lower highs. So here's the high, lower high, lower high, lower high, lower high, lower high, lower high. But every new gap, there's no gaps created until here. So obviously a trading range, big down, big down, big up, lower part, upper part of the trading range. Here though, this is the 15-minute, consecutive sell climaxes. Why are the best bear bars at the bottom of the sell climax, or the bottom of the channel? So if we look at 5-minute, here why does the trend get stronger, but then closes the gap? Tells me buyers below, scaling in. They'll do the same thing here. They bought, scaled in. So where I'm getting at is, it doesn't matter any of these. This could be a bear bar. This could be a bear bar down here, another bear bar down here. There's nothing that would make me sell over here. Arguably, you'd be looking for 10 bars, 2 legs, sideways step, some sort of correction. Another note, notice the moving average. This is just the 5-minute moving average, but going above it, below it, above it, below it, above it, way below it, above it, below it, above it. So we're starting to channel. obviously a clear bear channel, but a bear channel is just a bull flag, so odds are trending up, clear channel, as you can see, 3 pushes somewhere, it's going to probably lead to an upside breakout. So if we go back to the 5 minute, it'd be selling, I guess the best way I can put it on this video, in this example, selling here, anywhere down here, you have to ask what your objective is. Channels usually test back to the top and create trading ranges. We had a bear channel, tested back up here, large trading range. Reason why is if you think about what a channel is well, you've all these bull reversal attempts. Here, tried to reverse, here, tried to reverse, here, tried to reverse, tried to reverse here, anywhere. These are targets for when price goes back up. People who bought, say here, even this close, somewhere, up here, it doesn't matter. Some bulls will just keep scaling in lower. As crazy as it sounds, because they know they'll make a profit. So let's just pick anywhere. We'll pick say you bought right here at 28.25. Notice price comes to 28.25 right here. It even goes above it before. So if you buy here, bulls will buy, where's it here? I'm sorry, it's actually somewhere around here. You just keep scaling in lower and get out at their original entry. Because bulls are confident he won't go far. So, if you think about it, 2 out of 3, we'll say 75% of the time, the bear channel will not get stronger. It will get weaker. Here is a red flag in my opinion. Very strong, very big bar, terrible follow through. Although it got more down, if you sold this or bought this, used a measured move, scaled in lower, you'd have made a profit. Notice here, if this leg is the climax, arguably, the high, it went 1 tick above, maybe 2, 725, 750. So it 1 tick above. So when it here, bears wanted a double top. As long as it's making lower highs, bears believe they're in control, even if they're weakly in control or not strongly. When we reversed up and went 1 tick above, now at a minimum it's in a trading range and not a bear trend. We did the same thing here, here, and ultimately tested up. Okay, lastly, I wanted to real quick, better explain why it's not good to look to sell. You see, it's important to notice. So this is the 12th. This is the 11th. It's important to notice, what the higher time frames are doing. So let's look at the daily real quick. Here is November 11th. Obviously a tight channel. So you can argue low 1, low 2, however low 2 failed, strong enough bull breakout for more up. So we had a low 2. It doesn't really matter, you can call it a low 1. Point is, very strong up. The odds are shorting on a stop below and making a profit, obviously a profit, say 2 times your initial risk, which would be somewhere down here, is very unlikely. and be larger than the biggest pullback in a way. So here is the 11th. Here's the day before it. You have to, if you notice, we had a low, you can call it a low three pushes. Price could not get below it on the daily. So there were so many buyers below that we turned up. Now, with it being a bull trend, it's obviously better to look to buy, and anyone shorting will be buying above bars and scaling in. However, look at the selling pressure. We've had 4 bear bodies, arguably 5, since the 16th of October. So the odds are most of these days will be either a bull trend day or a doji. So if we go back to the 5 minute real quick, here it is. Sorry, this is not the right day. One more day. Here we are. Let's look at the low of the prior day. So here's the prior day's low. Now that is down here. So we'll go 15-minute chart real quick and make this a little easier. Here is the 11th, and here's the low of the prior day. We've got a spike up, a gap, starting to channel down. Actually, I apologize. Well, I want to see. I believe we're talking about the sorry about that. We're talking about the 12th. I'm not used to the. I don't really look at the Globex. I normally trade the daily, but I think either one is fine. So, real quick, I want to go back to the 15-minute, just because it's easier to see. So, if you're looking at the 12th, arguably 2 legs down, the low of the day. Well, not really. The low of sorry about that. I was looking at the wrong day. The low of the prior day is here. So let's think about the daily chart in terms of, you call this, it's a low 3, it's a low 1 on the daily. You can see right here. It doesn't really matter what you call it. Do you want to shorten the stop below this bar? Odds are buyers below for more up. So if we look at a 5-minute chart, or 15-minute chart, excuse me, during the 12th, around, do we want to sell after price has gone below the low 1? So the stop entry, the stop entry point was right here for the bears who sold the low 1 on the daily. Do you really want to sell, I don't know, 3-4 points down from below it? Odds are any bulls buying here, somewhere down here, will make a profit. So if we go back to the 5-minute, right here, selling the bar 3 you have on your chart, or the 8:45 bar Central Time, you're shorting below the low 1. When, if you're in a trading range, you want to buy low, sell a high. We're obviously channeling up, so I'd rather look to sell new highs. Bears will not short on stop entries in the channel because it's a low probability strategy. Think about it. I know I'm going to the daily a lot, but I think it's just an important example. How much sense does it make to sell below one of these bars in a strong trend below the prior bar? Look at every low. This low went from 2025 to 88.50, so around 11 points. Now, you have to ask yourself, even if you're looking at a 5-minute chart, you need a stop. Where do you put your stop? Selling down here, you need a very wide stop. The math doesn't work. You have a very big risk, not great probability, and low reward. If anything, you're shorting above bars. For example, shorting here, 1 point higher. Maybe shorting above here. However, here's the problem with that. There's a gap. Gaps down here, it doesn't really matter. Strong enough trend for any pullback to the moving average to be bought. So I'd rather be buying most days when I can, especially on a day like this, where you clearly have climax, best looking bars of the day. Okay, last thing I want to show you. This is actually today's E-mini .D, the dot daily on the 5-minute, and this is another kind of example of, I think, selling too low. So let's look at today. We had 3 strong bars down, but we're at the December high here. The day before, we had 3 bars down, but we had the low of last week. So if we look at the weekly, that's the monthly. Here we go. 2 days ago we had yesterday we had a target, the weekly low. Today we're below it. So this morning, when we were somewhere down here, do we really, how much sense, what are the odds that we'll get a measured move down from here? Even if you sell down here, you could scale in and make a small profit, but let's look at a higher time frame and notice, every new low has been bought. So obviously buyers below here, buyers below this bar, buyers below this, scaling in. This, I believe, went 12 points down. This low to here went about 11.5. So the odds are bears, similar to your question, if you're selling here, you're selling where bulls will add on, expecting price to not fall further than this move. So it all comes down to higher time frames. So lastly, and I'm going to sum it up in the next minute, 60-minute chart. We have the all-time high. We had the December high yesterday. That was a target. Trading range. It's likely to fall past support. This December high. So yesterday and today, touched it here a while back. If we look on the 15-minute, we can see it a little better. We had a weekly low somewhere around here. I don't quite remember where it was, but it was somewhere in this area. So there was room down in terms of, right here. It was at 99.75. So there was room down for more. Here, it's the same as the example earlier. You had very big climax bar, and this is 15 minute. Terrible follow through. So, do you want to be selling the best looking bear bar of this, arguably 2 legs down this bear channel at the bottom of the channel at known support, the December high, when we reversed up from it a couple days, couple weeks back? So it's all has to do with where you are in the market cycle and other time frames, if you will. Alright, I hope that helps. Let me know if you have any more questions. Thank you.